These days, when you get good at something, you have a lot of different ways you can share that knowledge with others. That skill or knowledge that you have allows you to influence others, and I've worked with dozens, if not hundreds of resellers who have really honed their craft of flipping stuff for a profit, who have also taken to platforms like YouTube to share their tips, stories, and their journey. I decided to jump onto YouTube a few years ago, and that opens up a whole new world of tax deductions, implications, and things to be aware of. If you're an influencer, content creator, or thinking about joining the online creator space, you're in the right place. My name is Mark Tu, and I'm a CPA and former reseller who specializes in helping resellers and online businesses and content creators with taxes and with growing their businesses profitably. Today, we're diving into a topic that every influencer needs to know about, taxes. I want to cover some of the basics as if you were just starting out. For many of you, this will be a review, but I want to make sure that an influencer or content creator knows where to start if you haven't done anything with taxes before. Okay, so what counts and what doesn't? As an online content creator or influencer, income can come from a lot of different places. You might be getting money directly, or you might be receiving products or even trips as payment. The IRS considers almost all of that taxable income. So let's talk about cash payments. Any money you received from sponsored posts, brand collaborations, ads, or any other source as cash is taxable. That's pretty straightforward. So what about gifts and freebies? Here's where it gets a little bit tricky. All of those free clothes, gadgets, skincare products, or meals you get or might get in the future in exchange for a post or shout out are also taxable. If a company gives you a $300 designer handbag to promote their brand, the IRS considers that $300 as income, even though you didn't get paid in cash. So what about trips and experiences? Yes, that trip to Bali the skincare brand sent you on for work, that's also considered taxable income. Okay, I realize most of us are not getting those kinds of influencer perks yet, but it might be helpful to know if you ever do. Basically, if you get something valuable in exchange for promoting a product or brand, the IRS considers it to be payment. Now let's talk about something a bit more exciting, write-offs, also known as deductions. You can reduce your taxable income by claiming certain expenses, and this is where a lot of influencers miss out. Let's talk about the home office deduction. If you're creating content from home, like many of us do, you may be able to deduct a portion of your rent, mortgage interest, utilities, property taxes, and so on. Just make sure you have a dedicated workspace. The IRS likes to see that there's a defined area in your home that you use exclusively for your business. Equipment and supplies. Do you have a camera, lighting, tripods, editing software, or any other gear you bought specifically to create content? All of that is deductible. And don't forget about your computer, phone, or tablet if you use those for business as well. I recently purchased a new microphone, new tripod, new laptop, and the fact that all that stuff is fully deductible takes away some of the sting of the income tax. And we've also got travel expenses. If you travel specifically for a paid job, you can deduct those travel costs. This includes flights, hotel stays, meals, and even Uber rides. Just keep detailed records. If the IRS ever asks, they'll want to see proof that this wasn't just a vacation. And this is a great way to be able to deduct a trip and even bring along family if they all have a legitimate business purpose. And I did this very thing, which you can watch in this video and use the link below. And then we've got professional services. So paying for a photographer, graphic designer, editor, or even a CPA like me to help you with your taxes. Good news, that's all deductible too. Okay, we've talked about income and expenses, and you have to be able to have a way of keeping track of all of those inflows and outflows. I know record keeping isn't glamorous, but it's incredibly important. Here are a few things to remember. Use separate accounts. Keep your business and personal expenses separate. It's as easy as setting up a separate bank account or credit card for all your influencer-related transactions. This makes putting your numbers together so much easier come tax time. Document your freebies. If you're receiving free items, make a simple note of each item's fair market value when you get it. You can take a photo or save an email as proof, which will help if the IRS ever has questions. Keep all your receipts for business expenses and invoices for work that you've done. Digital records or images are just fine. No need to hold on to those physical receipts. And then strongly consider bookkeeping software. For those of you who really want to stay on top of things, bookkeeping software can automate a lot of this. Programs like QuickBooks or even Google Sheets can help keep everything organized. And trust me, the time you spend tracking things now will save you a lot of headaches later on. One thing a lot of creators aren't aware of is quarterly estimated taxes. If you're earning income without taxes being withheld, like a lot of influencers, you may need to make estimated tax payments every quarter. This helps avoid avoid a big tax bill and potential penalties come tax time. So when to pay? Estimated taxes are due every quarter: April, June, September, and January. How much to pay? A safe bet is setting aside 25 to 30% of your income or your profit for taxes. That typically should cover the federal, state, and self-employment tax. And I have a video that talks more about how much you should be setting aside. And then as far as how to pay, the simplest way is just to go on the IRS website and pay online. Just make sure you're keeping up with those payments so you're not surprised by a huge bill at tax time. So now let's talk about the self-employment tax, which often surprises new influencers and business owners. When you work for yourself, you're responsible for both the employer and the employee portions of Social Security and Medicare tax. This adds up to about 15% of your profit. I like to tell my clients that if you're paying self-employment tax, it just means you're an official business owner. You're in good company. And once you hit a certain point in your business, it might be a good time to think about an S-Corp where you can actually avoid paying a lot of that self-employment tax, which you can learn more about by watching this video. See the link below. So to review, keep track of all your income, even those free products. Maximize your deductions. They're your best friend. Keep your records organized throughout the year. Don't forget quarterly taxes to avoid a big tax bill and penalties later on, and be prepared for self-employment tax as a business owner. If you have any questions, feel free to post them below. Subscribe and check out the links below for more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.